1 second. Okay, we are live. Great. Give me 1 second. Hello, everyone. Welcome to this webinar where we discuss how are Indians earning and spending their money. Today, we have Nikhil and Ashray with us for this discussion. Let me quickly introduce these two gentlemen for everyone. Starting with Nikhil. Nikhil Aggarwal is the founder and group CEO for Grip Invest, an alternative investment platform offering high yield investments starting at just 1000 INR. Prior to Grip, Nikhil was a consultant with the World Bank for their transport practice. Nikhil was one of the co-founders of Chalo, India's #1 bus transport tech company. Nikhil, welcome to the podcast.
Thanks, Yash.
Um, Moving on to our next guest, Ashray. Ashray Iyengar is VP at Elevation Capital, focusing on growth investments across consumer tech and fintech. Ashray was one of the founding members of CRED, where he spent the next 5 years across product business strategy roles. Before CRED, he was an investment analyst at Nexus Venture Partners, focusing on seed Series A investments. Ashray is also an alumnus of IIT Bombay. Quite an impressive profile, Ashray. Warm welcome to this webinar and thank you for taking the time now.
Hey, thanks, Yash. My pleasure to be here and look forward to our chat.
Thank you. For our audience, just to set out some more context, today, along with these two gentlemen, we'll be discussing how is India evolving, how an average Indian is earning and spending their hard-earned money, and answer the most important question, which is क्या अगले 10 साल सही में इंडिया के 10 साल है? This first webinar is part of our AltXtra series, which is curated by Alt Investor and powered by Grip Investor. I am Yash Roongta, and I'll be your host for this series. While we discuss some key questions on this topic, I would request the audience to keep their questions incoming. There will be a chat box wherever you are watching this live. We will pick up as many questions at the end of this discussion. Thank you so much for tuning in right now. Okay, gentlemen, everyone comfortable? Should we get started?
Yeah, let's go for it.
Yeah. Okay. Ashray, we'll come to you first. You were one of the founding members of CRED, which was known to be building for the top 1% in India. Can you define with some numbers as to what is the top 1%?
Yeah, it's a very interesting question, Yash. I think when we started, our views also significantly evolved from what we thought the top 1% was versus what we actually discovered the top 1% was. Like if I may hazard, like I'll answer the question, but I'm just curious. Maybe I'll throw it back to both Yash, Nikhil. What is, if you guys have to answer in like one line, one sentence, what is your guess? And then maybe I'll share what we discovered.
Maybe I can go first. I agree that I think it's a dangerous question because I think the answer will varies quite a bit from how you see it. I think to me the 1% is actually representative. It's not a numerical number. I think it's representative of a philosophy for people who today in our country would earn say over 10 lakh rupees a year. Okay, because someone crossing that threshold has a certain quality of lifestyle which is fundamentally different from most of the other part of the country, right? In terms of being able to save, disposable income, access to services, the kind of how they will use their money. So I think to me, it's actually maybe 60, 70, 80, 100 million people who cross that 10 lakh rupee earning bracket.
Yeah.
For me, actually, the bar is a bit more higher. I think 30 lakhs. Because 10 lakhs, I mean, from where I come, I think people are able to earn that kind of money in tier 2, tier 3 cities also nowadays. But Yeah, Ashray, keen to know your thoughts.
Hi, and look, I think these are very interesting perspectives. These are perspectives we also, I think, started with in some sense. So let
Mhm.
me, I think, walk you through, I think, that journey of how we uncovered or what unraveled, like, or peeled the layers of the onion as we went along, right? See, I think our first view was the top 1% would be, let's say, like folks who buy luxury, who are very rich. In some ways, you can say crorepati hai, and so on, right? At least that was the original image. At least we had saying that yeah, top 1% to ye hona chahiye. And like the immediate image you have is to say that look, India has a bunch of billionaires. That is the first immediate association that comes to your head. But I think what we ended up contextualizing later, I think, is that I think in India, I think one other sort of side track or side point to which to sort of make is what we also hence call middle class is also very critical to define what the 1% is. And both of these will have to be sort of defined in conjunction. And I think our realization was in India, actually 70% people are dependent on agri or agri related sort of areas for employment. And that's probably even roughly 70% of the country. So if you actually say mathematically, like what is middle? Middle is like 50th percentile plus X minus X, right? Like that middle actually is folks who are focused on agri in some sense, primarily living in rural India. That actually ends up being middle class in India, right? Now, this immediately then contextualize say if that is middle, then what is premium? And I think when you come to that, one interesting data point I was looking up before this is like the number of people who earn, let's say, more than a crore in India right now. I was actually looking at the income tax filings for the last year for which data is available. The number is around 2.16 lakhs. In a country of 130 crore people, that is just 2.16 lakh people who fit this, right? Assume in India, there are many more self employed folks who run their own businesses and so on. And let's say that's 5 times the size of this as well, right? You are ultimately talking about a pool which is 10, 12 lakhs. This is actually not the 1%, is actually the top 0.1% of India
Yeah, yeah.
effectively. And the top 1% actually ends up being closer to what Nikhil mentioned, which is that audience which is north of actually 10 lakh rupees. One proxy
Interesting.
to actually imagine this audience, the way we contextualize this was when CRED started in 2018. Around that time, India had around 30 million unique, or roughly basically 3 crore unique credit card holders. What we
Hmm.
ended up discovering that credit card ownership ended up being a very, very good proxy of affluence in India, given how banks basically historically underwrote such products and actually gated access to such products over 10, 20, 30 years. Interestingly, what CRED discovered was that the banks ended up doing our job for us in terms of cleanly cutting this base. And that credit card ownership ended up being a very, very strong proxy for the top 2% of India, roughly. Within that, what we ended up discovering as a proxy is the people who own multiple cards, which is around roughly 40% of that base, is something which actually mimics the top 1%. So the closest image or the closest example I would give to someone is basically multi credit card ownership in India, right? And now when we
Sure.
look around us, there would be people like both young, both old, or people who would have it. That I would say plus minus 30% would approximate that audience to a reasonable extent. And if you, let's say, add like layers like credit score and like 750 plus, I think that's a good enough proxy for someone to imagine.
I
Sure.
want to come in here because one of the common things people ask is, ki yaar, or the belief is, there are a lot of people in India who do not disclose income, right? And if you do not disclose income, then you obviously may not be eligible for a credit card. At CRED, did you guys build in filters to say, okay, the market of credit cards may be X, but the user base eligible for credit cards and hence fitting that 1% definition could be Y? Was there a bridge to that as well?
See, I think you're right, Nikhil. I think that disclosure, honestly, maybe is poor in India. There might be gaps to say that, look, someone may not be fully covered. My anecdotal learning, and we don't have hard evidence, of course, for this, my anecdotal learning was for self employed folks beyond a particular income threshold, and for basically folks who run small businesses, MSMEs, or run their own businesses, they do end up getting access to a lot of these premium cards and so on via bank relationship managers and other channels in some sense. So I actually don't think that access has actually been a problem. They historically may have been gated out, but I think in recent years they've all been part of the mix anyway. So I think they're already accounted for and counted in this. There would, of course, which is why I said maybe it's a plus 70% true answer, and the plus minus 30% there could be gaps there. So this I would say is the closest proxy one could imagine. But of course, there would be some folks who may not conventionally, let's say, fit this. But I think over time that gap is also bridging in many ways, and I think they would also historically, when you see folks around you leveraging benefits on a credit card, more folks want to come and be part of that in some sense. So I think that gap is narrowing over time. But
Sure.
yeah, go ahead.
No, go for it.
No, I just said that. Look, assuming even that audience, just as an assumption, maybe like 50% more. Like let's say we're only accounting for half the folks. This broadly still says that look, instead of top one, maybe it's top two. But broadly, I think we are in the same neighborhood and same ballpark in terms of sort of assuming who this audience is. Yeah.
Sure. Got it. Thank you, Ashray. Sorry, Nikhil, just 1 second. We are getting comments from the audience. Your voice is not very audible. If you can just adjust your mic a bit.
Is it better now? Can you hear me clearly?
I can hear you, but I think one second.
Yeah, I saw the comment.
Megha,
I'll try to adjust the mic if I see the comment again.
sure. Okay. Thank you, Nikhil. Um, okay. Thank you both for your answers. My next question is a personal question, maybe. What cars do you gentlemen drive personally? Nikhil, do you want to go first?
I'll
Oh, is he
audio
gone?
whether the audio. Um,
Yeah,
am
maybe
I
Yash,
audible?
oh, sorry. Yeah, Nikhil, go ahead.
Yeah. I hope the audio is better. I'm trying to be as close
Yeah,
to the
it is
microphone as
better.
possible. I drive an MG Motors car,
Okay.
and I
Okay.
also drive a E series, a Mercedes E series. Uh, but
Okay.
uh, but I know where you're going with the question, so I want to clarify that it's a pre-owned car. It's not a first-hand car. It's a pre-owned car.
And after you?
So I actually drive a Skoda Slavia.
Okay.
Interestingly, this is my first car. I actually till now didn't believe in car
Wow.
ownership. Like I would be one of those very rational sort of folks who would not think this is a wise investment in some sense. But I think
Really?
Bangalore traffic plus poor quality of Uber and Ola, I think made me convert some time back. So I actually just got my first car 6 months back.
But have you guys noticed? So, of course, Nikhil drives a pre-owned E series, sure. But have you guys noticed more luxury cars generally on the road? Like Ashray, I want to understand this from your experience as well because CRED also built CRED Garage, which was again for the top 1% for to get good services with your car ownership, be that insurance, be that challans and everything. But have you seen that people are spending more on cars right now? They want more premium cars. They want better service. What's the trend?
See, I think anecdotally, again, I don't have hard evidence, but anecdotally,
Sure.
your answer is, I think, a resounding yes. I think
Hmm.
compared to like years, like even a few years ago versus now, I feel you of course observe more luxury cars around, and I've also I think been very curious as to what's been powering basically something like this, and
Hmm.
I think my take, I think, and something I think I also observed at CRED a little bit is that I think oftentimes this is also in some way a marker of status. And in India, I think
Hmm.
everyone likes to basically, there are very few proxies for you to what I call humble brag, where
Hmm.
you don't explicitly say like where you have reached in life, but you signal
Hmm.
softly. And this is the currency in which you signal, basically, without you ever
Hmm.
needing to communicate verbally that, hey, I am
Hmm.
at an X level in life right now. And I think
Hmm.
like car ownership and the kind of car you drive is a fantastic currency to basically signal, along with so many other
Hmm.
things like the clothes you wear, like the accessories you
Foreign
have.
vacations.
Yeah, things like that. And the last dimension, of course, is social. Uh, so I feel one, you just wanting to signal status a lot more, and you now having the means to be able to do it, plus
Hmm.
you being surrounded by signals of these kind in all kinds, and let's say primarily, let's say on Instagram or on all
Hmm.
other social media where you're seeing other people do the same, right? In some way also makes you
Hmm.
want to say that, oh acha, okay, people I peg myself with or think are in the rough same social neighborhood as me are at X level,
Hmm.
let me also showcase in some way, right? And some of those I
Hmm.
think are good trigger points and good drivers for I think some of this basically happening.
But do you think that these people are actually earning that kind of money to be able to satisfy that social currency or social status, or they are maybe taking on more personal loans to fuel these kind of spends?
See, I think for cars, at least, like I think it's a fantastic point. I think for cars, I don't think, let's say, personal loans might be the right avenue to do it. But the broader point,
Sure.
of course, holds where I do think that credit and easier access to credit is a big, big lever in being able to do this. And as I
Hmm.
think also Nikhil pointed out, like basically, the maturity, the growth of a large secondary market and a large high trust pre-owned market, I think are also interesting levers. Interestingly, we have a portfolio company called Spinny that enables some of that. There's a company called Cars24,
Hmm.
and slightly higher trust marketplaces where some of those which increase affordability plus credit, which I think is a bigger lever, are of course huge factors according to me. But
Hmm.
would love to hear Nikhil's and your view as well.
I think if I connect what Ashray said about the desire to demonstrate a certain social status, and I think social media is a big component of that. Um,
Sure.
and Yash, to what you said on loans, we work with a lot of NBFCs who do personal loans, right? And even to salaried folks, not only to small businesses but also salaried folks. And there we see a lot of use cases around personal consumption, right? I want to buy the
Hmm.
new iPhone. I want to pay for that next vacation. I want to send my children to a certain kind of school. So personal loans are financing lifestyle choices, which earlier I
Hmm.
think as Indians we were putting to saving or questioning whether we really needed them. But it is driving consumption, both for whether vehicles or for other things that somewhere are linked to social status, expectation of certain lifestyle. Um,
Hmm.
Someone said this recently. Till maybe 20 years ago, we looked at social status as the people living around us, right, or our
Hmm.
colleagues, because that is what we saw every day. But today social status is driven not only by people living around us but people across the world, right? So you are
Sure.
equally aware of what social status means to that and what consumption means for
Sure.
that.
It's actually a fantastic
Sure.
point.
Yeah. I didn't say it, so I'm
But
not going to take credit for it. The credit goes to my wife for coming up with this. And I will get beaten up if I don't give credit. So, yeah.
don't we all do, Nikhil? But do you think these increase in personal loans, even with the NBFCs you work with, Nikhil, will that is that good for the economy, or will that lead to more debt traps within the public?
Yeah. I don't think that it can be said it's good or bad at a high level. I think there are many more things that have to be looked at. For example, can that loan be serviced at a level? What is the total leverage that the person is taking? I don't think it is bad. Okay, I think for it to be
Okay.
said good, I think there are more information data points that need to be taken. And I would like to believe that some of the safeguards RBI has put in since last year, the direction they have given to both banks and NBFCs is directed to protect the economy from overheating. Some of the stuff
Mm-hmm.
that RBI did last year around credit cards that was happening, credit card
Mm-hmm.
growth that was happening, or BNPL lending that was happening, I think has softened that market. But we are an
Sure.
economy which is growing fairly rapidly.
Mm-hmm.
Aspirations are high, and I do expect more people to make these choices for credit to fund lifestyle.
Sure. And Ashray, any thoughts on that?
Look, I think I helped build bunch of these products as well at CRED around personal loans. I think
Yes.
uh, the insight here was clearly India's at least credit starved at multiple levels, especially on consumption. One, you are
Sure.
seeing all of these cues around you everywhere to be able to demonstrate status or just feel good about yourself or consume more nice and interesting experiences and products. And if affordability is actually solved, it's actually fantastic. So I do think that there are positive ramifications long term for the economy with respect to like folks producing more, consuming more. But I still think that we are in like our adolescence years with respect to learning how to deal with unsecured credit. And like
Sure.
I think it's of course great, and I think the regulator is doing a fantastic job of gatekeeping it to a meaningful extent, and I think some of those trends will allow us to scale. What we are interestingly seeing is, in spite of, let's say, risk rates increasing to like 125%, the regulator indicating that we want to cool down the whole segment, appetite still stays strong, right? A lot of these things are passed on in terms of price increases to consumers. In spite of those price increases, I don't think the demand has proportionately disproportionately sort of gone down, which just says that, look, we'll figure out what the guardrails are, but the core underlying need stays. If done in a careful, measured way, I think it can be net positive for the country. Of course, there'll be missteps along the way where like folks will learn better how to use credit, how to integrate it deeper into their
Sure.
lives. And I think that may not be a very straightforward, smooth, painless journey. And I think net, if you zoom out enough and take a long enough 10-year view, I think we'll be net better off.
Sure. Got
Even
it.
now, let's say across all of these fintechs, you still see like every month you at least see anywhere from 5,000 to 10,000 crores of personal loan disbursals happening right now.
Wow.
And every month, and I would just say this is the new economy kind of folks. The banks, of course, do much larger scales. So just to give context, that is the scale we are currently talking about. And this kind of non-end use controlled sort of credit is basically in this zone. Credit card spends are, of course, in a very different orbit altogether. And I would still say this is still better off in some sense because you have clear pricing, transparent pricing, and so on. In credit cards, I think a lot of people end up becoming what is called inadvertent revolvers, right? Because where you don't pay a full due and you end up actually effectively revolving, which is taking a loan from the credit card issuer at mostly somewhere between 40 to 45% annualized interest, right? Which is pretty bad. And that seems like one of those profit pools which is thriving on information asymmetry and lack of awareness. I would still say this is a slightly better form factor to learn and manage credit than something like that.
Sure. Got it. Uh, the I want to cover the flip side of this as well. So people are spending more probably to elevate their social status or maintain their social status. People are taking more loans as well. But we have seen data around that people are investing more money into the capital markets as well. The SIP inflows are at all-time record high. Mutual funds, we have seen thematic themes get a lot of inflow. Even if the FII, the foreign institutional investors, pull out money from India, the markets are all good. There is no major crash that has happened as well. So are people investing more money into the markets as well and using loans to fuel their personal spends? Is that the trend that's going on, or it's something else? Keen to know. Nikhil, do you want to take that first?
Yeah, sure. So I think there are two, three different things that we need to talk about here. One is that what we are seeing happen is still happening from that 1% population that we discussed.
Exactly. Yeah.
And that 1% population is seeing a very significant growth in wealth, right? As a combination of income from various streams of sources. And one of the insights from Elevation's report that got published around this was how that growth of 1%, which is that top households in India account for 50% of wealth in India. Now these households are changing the way they save. They're moving money out of maybe non-financial assets or fixed deposits into consumption, but also into more capital markets. Right?
Sure.
I think that is the larger trend that is driving the capital markets from a value perspective. From a volume perspective, I think there is a lot of new people coming into the stock markets, demat account opening, mutual fund account opening, which are then trying to invest in those products. So, as an economy, because of the growth in wealth, a lot of that new wealth is getting moved into the markets and consumption, and I think that is actually the larger driver in my view.
Sure. Ashray, what do you think?
I think nothing different. I think Nikhil broadly agree with Nikhil's point, and I think it feels like, yeah, it just feels like you're moving from non-financial assets to more financial assets, and that seems to be the bigger catalyst in terms of what's happening. And two, second is one, as Nikhil said, in terms of stock of existing wealth. Of course, there's a large pool of that, and then in terms of flow of new incremental income coming in every month, where that allocation is moving, that mix has basically basically changing right now.
Sure. Okay. Uh, I want to talk about budget, and Nikhil, I'll come to you for that. What did you think about the budget? There was increased taxation on LTCG from 10 to 12.5 for the equity, and there was decreased taxation for property or debt-based fund from 20 to 12.5, but the indexation benefit has been removed. Do you think that will discourage people from investing money into the capital markets?
My personal view is no. And if yesterday's stock market performance is any indication of that, then that's where it will be, where
Uh-huh.
all the drop or the decline in stock market from the budget days got erased in one single day. So I think
Mhm.
the drivers of the stock market, which is a very strong belief in the Indian economy, this
Sure.
financialization of savings, the anticipation of and the desire for high growth in wealth, okay, it
Hmm.
will continue to drive the stock market. I don't think taxation is going to be a real barrier to it or is going to significantly change,
Okay.
especially when it comes to retail investors. And I'll simple
Hmm.
thing: how many retail investors do day trading, right, or short-term trading? But do they really factor into account the cost of day trading? Right? They don't.
Hmm.
It's chasing that 1%, 2%, and then annualizing it to say I made 300% this with this trade, right?
Sure.
So I don't think the mindset is looking at it from that perspective. So I don't believe that it will fundamentally change that. Where we are among other factors, I think the taxation has helped create simplicity. Okay, all
Hmm.
assets of particular type, all listed assets have become at par. Indexation benefits, I think, will hit real estate the hardest. Okay, because real
Hmm.
estate tends to doesn't move necessarily in a linear direction, and you need to hold it
Sure.
for a longer period of time, where indexation has to play a much larger role. So indexation going away is probably hardest for real estate. As in fixed income alternative investment platform, I'm obviously incredibly happy to see bonds, listed bonds, being brought at the same level as
Hmm.
equity, and I think it's once again
Sure.
signifying this government and SEBI, RBI's desire to make the bond markets deeper. So I think
Hmm.
that's obviously incredibly positive, and hopefully it gets more people to create diversified portfolios.
Hmm. Got it. And do you guys think that with all the maintenance of social status and maintaining that social currency across everywhere possible, people will take more risk in their careers or with the way they invest as well? The context I want to set with that is around 200 lakh crore rupees just sits around in fixed deposits right now, and that's not a small number, that's a huge number. But to keep on elevating social status or keep on maintaining the current social status with inflation, people should take more risks. But is that the behavior that you guys notice with what you do?
Asha, do you want to go first?
Sure. Like again, I basis the anecdotal stuff at least I am seeing. I still think people are fairly irrational at a individual level in terms of decision making, and there is
Hmm.
element to your portfolio money management that you operate in a rational way, but a large part of it still ends up being irrational in some sense, right? I think couple of reasons for what to do. I think the like for example when we are building Mint, one of the key
Hmm.
insights I think we could actually uncover when we were speaking to some of these CRED customers was the primary reason, like the fact that money still largely for even for these users go actually in FDs, right? At that time, now the numbers have changed a little bit, but at that time, 90% of our customers said they do an FD. But like maybe 30% said they do a mutual fund and 55% said they've invested in the stock in like individual stocks and so on. Very, very interesting
Hmm.
number, right? I still think you can't beat decades of conditioning saying something is good, something is
Sure.
safe, and so on, right? And I still don't think at an individual level, folks appreciate that like the real rate of inflation for most of the, let's say on this audience who we're talking about, the real rate of inflation is actually far north of the FD yields that you get. So in effect, you're
Exactly.
actually losing money on in real return terms, right? But when the only way I think habit formation happens is if you do SIPs, and yes, that behavior is happening to an extent, but not necessarily on the entire pool of money available every month, right? As like the full quantum that could be SIP'd and moved away in a more disciplined, logical way. I don't think it still happens. Two is assuming, let's say, markets crash, there's volatility, people, of course, still get scared. I don't think we yet have that full level of maturity of saying how do you weather
Sure.
cycles, how do you sit tight, and how do you do all of those. So, from that standpoint, the most common feedback or insight I would hear from customers is समझ में नहीं आ रहा क्या करूं, पड़ा है मैं FD कर देता हूं. That use case or that job to be done in a user's life, which is the cognitive load of picking, saying which fund manager do I pick in a mutual fund, which stock do I pick, paradox of choice hai. Like I have like 2000 SKUs on mutual funds, I have so many stocks, and I also get scared saying I can go meaningfully wrong as well. So why do I want to enter a choice in which there is so much choice and like there is meaningful variability and I can go wrong as well, I can go right as well. So oftentimes in this area you do what you do best, which is do nothing and do like a very safe choice, even if you may know mathematically it doesn't add up. And I still feel that irrationality on part of your money or part of your behavior is contributing to some of those, and I don't think that will get erased or that will change, because behavior change takes like generations to change, right? Some of these things. And I think the boom cycle we're seeing, the positive upside we're seeing in the markets catalyzes this and compresses the time frame to do all of this, but it's still going to take a meaningful amount of time. So and second behavior is people are rational at some points of time when they have enough time in their life, when there is less stress, when you have other stuff, you take more rational calls. When you start putting out fires in some other side or something else is going on in life, you again resort to like base behavior or saying I don't know what to do, let me do perhaps what might be mathematically not prudent but feel safer, and someone's conditioned me to believe it's the right thing to do. So I think some of those behaviors we can decode and understand from this lens, and of course slowly we can influence and keep changing some of these for the better.
I think it's so fascinating that investing money, which seems to be a mathematical exercise, is actually so driven by psychology and everything else, right? It's so much down to how a person is feeling, where they're coming from, what they want to achieve, what their dreams, hopes are, what they're afraid of, rather than the maths of investing. And I think I agree with Ashray. I think it takes time for things to change, and there can be events in the near future, in the midterm, that could fundamentally also change it. So for example, if the stock markets were to correct today, when people believe that this is a everlasting party or this is the way to make money, it may push an entire generation of wanting to invest in the stock markets, right? And we have seen this happen many times. Retail share of stock markets in 1990s was far higher than what it was in the 2000s, and it has taken time to get rebuilt again. So this, the way people perceive money and how this changes, how their behavior, investment habits change, will change with some of these things. I do think that the next generation, whether it comes to the way they think about jobs, and I think Ashray is the next generation. Maybe I'm the millennial and Ashray is the Gen Z, but I think the next generation does think about jobs differently, right, than our generation did, and I think our generation thinks about it differently than our parents' generation did. So some of these things will have some generational effect. Uh, or the desire for crypto, the number of people from a Gen Z who invested in crypto versus millennials was fundamentally different. The number of times people change jobs in Gen Z versus millennials are different. The taking of credit is different. So I think we'll also see this play out much more over the next decade. Um, Companies like CRED and to extent Bharat 12% Club, which made the proposition of investing in higher yield super simple, right? 12% club, credit mint I think was 9% or 10%. It was a super simple proposition. There was no SKUs. I think the simplicity that fintechs will bring to investments may also help power this change.
Nikhil, do you want to cover what you are doing at Grip to empower that
Yeah.
simplification?
I think we took this insight and we built something called baskets. Okay? We realized a lot of people who come to our platform see all these SKUs of bonds and SDIs, but they don't necessarily understand which one to invest in. There's a rating, there's a return, there's a tenure, and often when you can't decide, the easier choice is to not invest. So what we did to make it easier for folks is create theme-based baskets. And so whether you're looking for high returns, high ratings, short tenure, right? Whatever your investment objective is, we gave you a curated, diversified basket of bonds and STIs that allowed that decision making to happen. And Ashray, you're bang on. So 35% of all users on Grip now invest via baskets, right? Because it has made
Wow.
decision making simple. um, and this has happened within 1 month of launch. So I think factors like this, that innovations like this can definitely make a difference, along with obviously generational changes that will happen.
Sure. And I, I assume, Nikhil, these baskets are created by some certified professionals?
Yeah. Obviously, we are a regulated platform, so everything we do is regulated. And these baskets do
Sure.
get created by SEBI registered RAs, research analysts,
Got it.
and then get put on the platform.
Got
Yeah.
it.
Just add one point here, right? I think just insight, since you're speaking on the subject of FDs. One, again, very interesting insight I think I've observed while building for users in this space is that customers have, and by the way, I think going back to Nikhil's point, I think very soon into building for this audience, I realized this is not a maths game. This is not an investing game. This is a pure behavioral science game. And the main opportunity in the market actually exists today is because the folks who actually build are different from the folks who consume. So the archetypes who are the builders and who are creating these products and these platforms and all of these solutions are building it for themselves, who are ultra rational folks who might be more mathematical in nature, who might be very rational, less affected by other moves and so on. But the vast majority of people purchasing are actually fit a very different archetype. So you don't have enough builders who are thinking with that mindset, with that toolkit to say, let me go customer first and build it back from their fears, from their aspirations, and so on, which I feel is the largest opportunity in the market today. More specifically, I think one example of how this manifested for me personally was when I was speaking with user, I actually found a very interesting choice of vocabulary difference that I could see. For example, most people use different words and different frameworks for saving and investing. Interestingly, when you say saving is safe, you don't want any risk. Saving is also good activity you do. Investing is also good activity you do. These may tussle with each other a little bit in terms of how much share each gets, but both of these are different activities. They are not the same. Mathematically, one may say that they are the same activity, and it ultimately money at the end of the day, it's your money. You pull it together and you say how much return are you making? Are you making more than inflation? Are you actually making a meaningful enough return versus benchmarks or other things, right? But I actually don't think customers think like that, and large majority of them actually end up keep thinking different buckets. Within the saving bucket, interestingly, what I found, the reason FD is still popular is because FD sits in the savings bucket, not in the investing bucket. So
Got it.
you are not exactly competing with a different product. So you are actually, the use case you say is यार पैसे डूबने नहीं चाहिए, जब चाहिए तो मिल जाने चाहिए. And you are actually saying that like my job to be done and the attributes and the specs hence it should have as a solution are very different from investing. And investing, people are a little more willing to take risk. You're saying that yeah, now here maximize my return. Give me more risk, maximize my return. But these are compartmentalize my thinking and think in two different buckets. The problem arises when like you offer a solution that you're trying to attack the saving use case but with an investment kind of product, and that is
Understood.
where I think some of these dissonance sort of comes. So building the right, like deciding which bucket you lie in and solving for that compartmentalization for now and serving that in the right way, which is very customer first and then working backward, I think is the right way to sort of approach. Personally, for me, this was a very, very big revelation to say that this is the framework to think about here.
It's an interesting way to think, for sure. Again, it's a behavioral science problem, not a volume problem, like you said. I think running a community, we have also from time to time realized that people are thinking very different of these instruments. Even when we talk about debt funds compared with mutual funds in terms of equity or fixed deposits, people have that savings and investing kind of barriers, or they think it very differently. So very interesting. Um, my next question to you, Ashray, is Elevation put out a very interesting report, which Nikhil talked about earlier. The title of that report is India's top 2% are a $100 billion opportunity. And my colleague Megha will put that link in the live chat right now on YouTube, so people can check that out. But the question is, according to this report, people are going to spend on more premium products, or they're going to, elevate their social status even further via, taking more exotic vacations, or, buying a Louis Vuitton bag, even if they can't afford it, or, they get a Zomato Gold. So these are all premiumization of the existing products, right? From your perspective, for the next 10 years, where do you see the pockets of growth will come from? And what kind of businesses are you looking for to fund from an elevation perspective?
Got it. No, Yash, thank you for sharing and sharing that report with everyone. I think I'll just take a step back. I think the broader thesis that we were actually writing, the fact that there's a large opportunity in the top 2%, which is roughly 5 million households, was a subset of what we were writing. Our key thesis was to say that, look, it feels in some sense that everything in the consumer world in India, especially consumer tech, consumer internet, for us in some way we seem to all be in a zone where सब हो चुका है अभी मतलब like life इतनी simple already हो चुकी है everything where I feel my life could have been solved is solved. Like I get cabs on a
Hmm.
button, I get food on a button, I get whatever I want at the click of a button. What else is done? So I think for us as investors, in some sense, like I'm an optimist, I like to believe, look, the story is not yet over, there's a lot more to come. The goal was to attack like the biases and the beliefs head on, to say that the story is not yet done, picture abhi baki hai, and here are like 5 or 6 concrete ways in which, themes in which we think it could still happen. One of which was the fact that serving this affluent India still, I would say, in this very nascency in its maturity
Hmm.
as a theme, and there's a lot more to be done here. Within this theme, I think 2 3 things that basically stand out for me as an insight, and basically one is there's a very interesting power law that we observed, which I think one part of which Nikhil mentioned, which is that the top 2% of these households have 50% of the wealth, which is like the current
Sure.
stock of wealth that is there today, right? But in terms of even consumption, we saw massive power law here. For example, actually just 2 million power users on Mintra contribute almost 50 60% of their GMV, and Mintra has actually
Wow.
like almost 10 million users, but a very small section of their users actually are the lion's share of GMV for them, right? And we see very similar numbers for Amazon, where 12 million folks actually contribute almost half the GMV. So all of these Paretos apply. So in some sense, the first part is to say that, look, this is not new. This is already just happening. Averages are hiding the story till now. We have taken the effort to go peel the averages and look behind the average to see that, look, not everything is equal. There are segments which are actually disproportionately contributing, and averages are actually masking the real story till now. So I think that is one big revelation. The second one is, what does one do about this? Now let's acknowledge that yes, this is a very interesting audience. What if, let's say, someone wants to say what next, or the so what? I think there are 2 interesting themes here. How does one attack this audience? I feel there are 2 themes. One is, there are unique needs that this audience has, given the where they've reached in life, the kind of spends they have, the kind of lifestyle they lead, the fears, aspirations they have. So there's a bunch of unique needs that is different versus the rest of the country in some way. You go attack those. Second one could be, this audience actually values quality sometimes far more than price, and that is the second theme to go attack basically. So in my mind, that's the 2 ways one can see this opportunity unfolding. Let me elaborate a little bit to say what do I mean by unique needs. Like I'll draw 2 examples. One, like for example, for CRED, right? Like for example, multi credit card ownership and their need to not want to remember due dates of 2 different cards is a very unique need.
Sure.
Firstly, most people don't have multiple cards. Two, when they have multiple cards, interestingly, because banks don't talk to each other, the due dates of 2 cards never falls on the same date. So आपको 2 2nd of the month पे card pay करना है, 7th pay करना है. We have all historically been conditioned that if should you not pay your credit card bill on time, your entire family will become bankrupt. I'm intentionally making a very extreme example. This is like one of those mini bar in a hotel kind of examples where the fear is far more disproportionate to the misdemeanor in some sense, right? But
Sure.
you have an asymmetric fear and you have a structural imbalance created here, which creates a very unique need for a very small section of audience. A company could actually be built around this motion. You may not make money with that particular insight, but you use that to tap into and go make something else of that, right? Second, we see a company like, let's say, Urban Company. It's part of a portfolio. They 50% of their revenue now comes from the beauty at home category, which is salon,
Wow.
spa, and so on, right? Now, one would not think that your beauty parlors तो है यहाँ पे हर एक के almost again 1 kilometer radius of your house. There is no, this has been an industry that's about 30 years, 40 years, right? Like, why would you think someone coming at home to offer that convenience is different? Like, ये need ही क्यों है? If you would have gone
Sure.
back 5 years, 6 years, and you would have, like, ये अमीरों के चोचले है, ये अमीरों के problem है, right? Now, very interestingly, in select cases there, not all of those, in select cases, large businesses can be built. And these kind of unique needs are a big theme to identify. And I feel there are tons of such unique needs. For example, two ways in which I think this could manifest is pets. Pet ownership is very high in this audience. Now, there's a difference in the way people treat. Like, for example, 10 years ago, people would have said, I'm a pet owner. Today, you say, I'm a pet parent. That vocabulary shift from being an owner to a parent implies a large amount of irrationality on willingness to pay, willingness to spend, and price. For a capitalist and for a great builder, it's a fantastic opportunity to attack, because the minute you become a parent, you're like, I'm jitna kharcha kar lunga. I just want my pet to be good. I want them to have the best of everything, right? Very unique need, but that's a interesting shift that's happened, I would say, in the last 5 to 10 years. And I actually think pets itself can actually be almost a 5 billion opportunity in India in the next 10 years. And also catalyzed by the fact that folks in this audience are having lesser children, loneliness is higher. In some way, pets also fill that void of loneliness and gives you those oxytocin hits and all of those for far less headache in some sense, and which also I think fits in your life more. Or as you push like the age at which you have children and so on, this fills that void to an extent, maybe even in a transitionary way or maybe in a permanent way for people. The other opportunity could be premium travel. The way this audience travels is very different from the way other audiences travel. One would immediately say again, Amiro ke chochle hai, ye hai, wo hai, but creates a fantastic business opportunity to be able to co-serve it. So this is this whole theme around unique needs. The second opportunity I feel that could be very interesting is around premium quality, right? Where you are saying that, like, for example, there are moments in your life where quality, trust far outweigh the price at that instant. For example, if there's something to do with your kids, something to do with your parents, something to do with any high risk, high stakes, basically stuff, right? All of those places, quality will trump price to a very large extent. Otherwise, you'll be very rational. You'll bargain for the dhania. But in select instances, that rationality falls when you become irrational. Attacking those points of irrationality in your life could be very interesting. For example, one insight here is I can actually talk about Country Delight. Country Delight is a company in our portfolio. They do basically a staple subscription. They start with milk. They do a bunch of other dairy products. Now they do vegetables and so on. The core insight was to say that, look, mothers don't want to feed their children adulterated milk. You want your child to have the best quality milk that's possible. There's a perception and perhaps even rooted in reality to say that a lot of milk could be adulterated. So you saying that, look, I'm willing to pay 50% higher price just for my kid to get better milk. Now, you are no longer rational here. If tomorrow you say 15 is 70, you will also give that, right? You are time poor, money rich. How do you take advantage of that to be able to build great business? I think it's a fantastic opportunity. Tomorrow, something to do with your parents, where let's say most folks may not live with their parents, feel guilty saying, I have enough money, I don't have enough time to give them. Can there be interesting opportunities to be able to solve that gap and reduce guilt to an extent by creating the right opportunity? Of course, makes a lot of sense. Interestingly, we see in other consumer ways, Tanishq did a fantastic job with this, right? In spite of like gold shops being dime a dozen around here, Tanishq says, "Yeah, Tata ka quality hai, Tata ka brand. Aapko sona will not be adulterated. Your gold will be very pure." And they used to do that fantastic in the carat meter to say that we'll actually detect if you even have like impure gold back in the late 90s and early 2000s, right? And still an example of where quality trumps price. Like gold is a commodity. Tanishq still commands a premium. People would still like to go to Tanishq because the stakes are too high. You don't want to go wrong here. So you'll always go to Tanishq versus going somewhere else, right? And I think more such opportunity basically exists where you can find those moments of irrationality where that quality is far more important than price. I think thematically, this is where I feel that tons of stuff can still be done in India.
Sure. And anything on the fintech side?
See, I think on fintech, we actually spoke about like wealth itself, right? Basically, like for example, the part that we spoke about now, that the cognitive load, in spite, like we have increased awareness, we have increased education, we have still not solved you making the decision to the nth level, right? And there are, of course, challenges in the market today with respect to incentives and payouts, especially the way regulator has capped commissions in certain ways. I don't think the right mix and models have still fallen around. But if you go ask anyone, any of our friends saying that, are you happy with how you manage your money? Are you making the grade? The answer is a resounding no, right? In pockets, you do right calls, but as a holistic, cohesive level across all of your money, I think it's still an unsolved problem. And being able to tie that together in a thoughtful way where people feel like I am still in control. It's not like I'm trusting someone, but headache mera nahi hai, but mujhe fir bhi control mein hai. It's a very unique problem to this audience of saying that, look, I still want to exert control, but on 5-10% of my money, I still want to do like quirky stuff. I want to buy crypto, I want to buy this, I want to buy that. Maybe I will stay sane for 95% of my money. 5% I may be irrational. I want something that serves this very unique set of needs I may have. I still don't think that there are solutions that holistically solve a lot of those, right? And of course, these pain points still exist. And I think even in fintech, I think these opportunities can be built out in very interesting ways.
Nikhil, you are a fintech entrepreneur. What do you think will happen to the fintech landscape in next 10 years?
I think within fintech, let me just focus on investments as a landscape. I think this is a bit changing in all different attributes of fintech. I think on the one side, there will be a lot more people who will desire some kind of portfolio management service, okay? Because they will say that, hey, I have a pool of money, say 5, 6, 7 crore rupees, and I need and someone to manage for it to me end to end. I don't even want the hassle of managing it, right? And I think that's what motivated Elevation to make an investment in a company called Deserve, which provides that holistic management services for products like even mutual funds. So I think that will happen for a set of people with disposable or saving or investable income above 6-7 crores. I think the second thing that is bound to happen is direct investing, whether it's equity, whether it's fixed income, will increase. I think there, how do we offer the quality of experience that Ashray was talking about, which this user desires, right? So, for example, let's say you bought a BMW. Yes, to your first point, when you travel Vistara Premium Economy. When you buy a phone, you buy iPhones. When you go to a hotel, you go to a Taj and you buy jewelry from Tanishq, right? All of these are great service experiences. Forget the product for a minute, right? You got serviced very well. Now you are expecting your financial service provider to also give you the same quality of experience when you make an investment, right? Whether it is digital or whether it is offline. I think the financial services platform have to step up to offer the same thing. Today, as a 50-60 lakh rupee earning person, your relationship manager is your bank RM, right? The branch in the corner, his RM is the guy who's giving you investment advice, and that's not cutting it to the quality that you're expecting from other services. So how do you bring digitization, or how do you change that process through offline online methods? I think that is the big opportunity that I see in wealth management, both at a HNI level, ultra HNI level, and at a the top 2% level.
So remove friction and give great service. I think these are the two main key points here.
And great service obviously has multiple things, like including customization. And the beauty of technology is that you can customize for everyone down to the nth level, and do it at a very low cost.
Sure. Okay. Okay. I think we are at the end of this webinar. Before we take on the audience questions, my last question to you guys, probably starting with Ashray, is क्या अगले 10 साल सही में इंडिया के 10 साल है? And how can people really make money for the next 10 years? I mean, how would you make money for the next 10 years if you have?
Look, I think the answer is a hell yes, it is. And I don't think there's any doubt that it is. I think a lot of things have aligned to bring us to this juncture right now. So in that sense, I think it is ours to win and ours to lose in some sense. And given the amount of given the incentive alignments plus the hunger the overall country has, I still would err on the side of being like, "Yaar, ho jayega," and I think we'll pull it off, right? And I actually think that this is one of those times where just being at the right place, right time is actually going to be a big determinant of where you end up in life, right? We saw this with a lot of people in the US in, let's say, the 40s, 50s, or in different times in life when you just rode the right waves, basically. You were there to just be at the right place, right time. Of course, we are all skillful. We will use our brains, but let's also call it like it is. And I think that is the biggest thing I think we're all going to benefit from. Over and above that, I think just irrespective of whatever we do, like I think like personally, like I think the markets are going to do fantastic. Whatever is your flavor, your risk appetite, just being part of it one way or the other is just going to allow you to ride that wave up. Like like less not investing meaningful chunks in equities will be very detrimental. Like I think too, you'll not get benefit of it. But planning all of this in a more thoughtful way in whatever works that suits your risk appetite and so on, I think is going to be good only. So I think more or less, I think my view is so long as you don't make obvious mistakes, you're actually going to be fine and you'll be able to reap the benefits of it.
Yeah.
Nikhil?
Yeah, in almost identical thoughts. I just think we're lucky wherever you know if you're in India today, if you're educated, you have access to some amount of savings, a job. I think you're just at the right place at the right time, and a certain level of growth in your lifestyle and financial savings is almost guaranteed by the fact of where you are. I think the choices you will make will decide whether it will be 20-30% higher or slightly lower, right? But I think that's about it. There are many paths to making income. I don't think we're in a situation as a country where it's just one or two paths. And I think whatever people decide based on what they're comfortable with, I think is probably a better way to go with rather than try to be too experimental.
Sure. Okay. Thank you so much, Nikhil and Ashray. We'll quickly move on to some questions from the audience. So, first question is from LinkedIn Live. Ashwin Singh has asked, RBI has been raising warning bells to lend with ease to MFI customers, microfinance customers, I think, and new age digital lenders. Do you see with new age lending avenues, it's getting easier to get money, which may have a snowball effect? Uh, Nikhil, do you want to take that?
Yeah, sure, I can. Um, I do think it's getting easier to borrow money. That if I see that's the
Mhm.
question, and I think the suggestion is that maybe a negative impact, but I do think it's easier to borrow money. We see, and many of you may know, we work with a lot of NBFCs and we look at their portfolios to create SDIs, and we see customers with having a 750 CIBIL score get loans at 26-27% cost of interest. um, the penetration or access to lending in our country is still limited, and that is changing very drastically thanks to digital lenders. Now that may have an effect on consumption, and if the safeguards are not put in place, it may have a snowball effect, negative snowball effect on also credit scores, impact to the economy, impact to well-being of financial institutions. But I do think that RBI has, in a very timely manner, and we discussed this during the call, timely manner raised warning bells, taken very tangible action to prevent that sector from overheating.
Got it. Okay. Another question that I have probably for you, Ashray, is how is tier two city contributing to the national economy compared to the metro cities in terms of, let's say, saving or spending? Do you think tier two will be contributing more in the next 5 to 10 years?
See, honestly, I don't have hard data to back
Sure.
my thought up here. And maybe if Nikhil, Yash, you guys do, please feel free to chip in. But at a broad thematic level, I feel like we are firing on all cylinders. And everywhere we are seeing that, look, this is not a zero sum game in some sense, right? Metros are firing in the way that they can. I think tier one, tier two will also continue contributing. And I think there is consumption being driven. Due to all the factors we mentioned on, perhaps in a more trickle down manner across all of these. So I think all of the sum of all of these parts is what is going to lead to that story of this being our decade. And all of these are, I think, equally critical to make that happen. And I think the early signs that we are seeing and the leading indicators are fantastic. So I think it's the same trend happening maybe at smaller levels with slight different nuances and so on across all of these. So at a broad thematic level, of course, yes.
Maybe I can just add one grip metric, which, to be honest, caught me by surprise. The top 10, 15 cities in India only account for about 40% of investors on grip. Um,
Hmm.
and We have investors today, investors, which are people who put in money from 10% of all PIN codes in India.
Hmm.
I was, uh, I thought that number will be far lower. Okay, I thought it would be far
Hmm.
more concentrated in tier one cities. But even for asset classes like fixed income, which have recently got fractionalized, have got available at small ticket sizes, there is already a penetration happening from tier two, tier three cities for the desire to to invest.
Hmm. Okay, got it. Thank you. Question on YouTube by Sanchit Khurana. Any solution for the removal of real estate indexation benefit? Any thoughts around budget? Nikhil, do you want to take it?
On a non-serious note, you can invest in bonds by grip as an alternative. We do offer 12 to 14% returns, and it doesn't adjust for indexation, but it's maybe a good alternative. But that's jokes aside. I'm sorry, I don't have great alternatives for the removal of indexation. I think
Yeah.
it does it's something that will impact everyone uniformly in terms of how real estate capital appreciation will get taxed. And I think the only thing I would say is please factor that into which asset class you're investing in. Real estate has certain pros and cons. Other asset classes have pros and cons. And as you make a decision, ultimately you're solving for an end objective. You're solving for a certain level of wealth or a certain ability to purchase something. There may be other ways to it with the same level of safety, and maybe those will be more tax efficient. So that's probably the only suggestion I can provide.
And I want to just chip in here from a capital gains tax saving point of view. Individuals can also invest in something called as 54 EC bonds, where whenever you sell a property or a piece of land, you can invest up to 50 lakh rupees into 54 EC bonds, and you don't have to pay any taxes on that. And the government of India or the government backed entities also pay you 5 to 5.5% interest. Something we just did recently. Um, Another question is many people are leaving India and are also investing in other countries, mainly in the UAE. Do you think that will be detrimental to the Indian economy? Ashray, do you want to take it?
Uh, See, I think I have not looked at the data up again personally. So, but yes, I think there is an anecdotal trend we keep seeing of some people leaving, especially folks with more wealth and so on, to like slightly tax friendlier countries. Uh, I still think that look, yes, it's bad for the country when like some of the cream of our country leaves and some of our best brains leave. Uh, would if we have better policies, better structures, of course it would be better. But that said, like I think the large majority of people, in spite of let's say some of these roadblocks, hurdles, can make that nuanced argument to say that it may still be better off staying back and figuring out within these constraints and within the system what to do, and it may still be beneficial. So I still feel like maybe both of these things can be true at the same time. And yes, there may be folks leaving. Yes, it may be bad. I still think yes, we might still be fine overall.
Got it.
And in an ideal scenario, if that didn't happen, it would be much better. But I still think it's okay. If things get worse, I don't know. Like if this becomes more material, more people leaving, and all of that, then maybe the answer or the thinking should change. But as of now, it's less than ideal. But I think we can still make it work basically.
Got it. Okay. Nikhil, anything to add to that?
Similar thought. I think as the economy
Yeah.
grows, this is
Okay.
going to happen, right? When as the U.S. economy grew or the Chinese economy grew, I think people did invest in global assets. What we do see is that a lot of NRIs do invest back in the country,
Yeah.
and that's actually one of the biggest reasons for our forex inflows. So I don't think that this is necessarily can only be viewed as a bad thing. I think it's people's
Hmm.
choices, and it can have various effects, positive and negative, on the economy.
Got it. Okay, another question is, in your opinion, what can hamper growth in the economy? What are the obstacles? Nikhil, do you want to take?
Sure. Coming again from a founder's lens,
Hmm.
I think we're seeing a lot of growth happen because the ecosystem to allow new tech has been encouraged, and I would like to believe that this government will continue to do that. They've obviously shown incredible amount of efforts, including removing the angel tax in this budget. So I think there are continued indications for growing the startup ecosystem, focusing on tech-led businesses. I think any change in that philosophy would make a difference. I think the importance of a stable political environment, which is also enabling at the same time, is very important. I think for the next 5 years, obviously, we have great amount of clarity, um, but uh, but hard to think of anything else. I think it's fundamental structures. As Indians, we've clearly shown that we are entrepreneurial. There's no lack of evidence there. As long as we can be provided an infrastructure that allows to flourish, I think it's possible. Maybe the last one is really geopolitics, which can impact things at a more macro level. There are shifts happening, political shifts happening across the world in key economies, and some of those may impact us over a longer period of time.
Okay. Ashray, anything to add? Or
No, yaar,
you good?
this is a little outside my circle of competence.
Sure,
So
sure, got it. No problem. Last question, I think, from the audience that we have for you, Nikhil, is, do you see a dip in the investment that people are making due to rise in taxation rates? I think that's from the perspective of the GRIP platform as well, and also overall markets as well. I think it's early days, but yeah, please feel free to add.
Radesh, who's asked the question, actually, the STG and LTG for listed bonds has reduced in this budget. It has gone from slab rates to 20%, and from 20% to 12.5% for listed bonds, so the products offered by GRIP, and hence the those are not detrimental to investors. In fact, last week we probably saw the highest amount of investments on GRIP that we have seen in a fairly long period of time. So even from, it's again very short period of time, but I think we are seeing a very different behavior because the taxation is not negative to us. Like I spoke before, I don't even believe that it will be detrimental necessarily to the stock market because there are just different levers at play there.
Got it. Okay. Anything more to add, gentlemen, before we close this?
Ashray, you
No?
want to go first?
no, nothing here. I think it's been a very fun chat. Thank you so much for having me here. It's been a pleasure.
Yeah, same here. Just want to thank Ashray for all his insights. I think whenever I have whenever I had a conversation which led to a consumer insight, I've always walked away feeling that those are the best conversations to have, because so much of what we come down to is behavior. I think Ashray's experience is incredibly rich of being both a founder and an investor, or being on both sides of the table, and tremendously benefited from some of these things. Thanks to Elevation for constantly publishing these incredible reports. So thank you, and Yash, thanks for hosting us. It was a pleasure to chat with you.
Thank you, both of you. Thank you. Very insightful conversation. And for our audience watching, do check out the Alt Extra series on the Alt Investor and on the Grip Invest YouTube channel. Thank you. Thank you so much.